Okay, guys, so we have a potential short opportunity for the US dollar against the Mexican peso. Now, we got to remember at the moment, the dollar is structurally getting weaker, not just against the Mexican peso, but against all the currencies in the world. And if we're looking at the dollar index and we look at the DXY, you can see this playing out at the moment over the long term since the coronavirus pandemic did cause the dollar to get stronger at the beginning of the year. But then that strength has unwound since the US central bank has been cutting interest rates in the US aggressively try to help the economy. Now, remember, interest rates play a huge role in the value of currencies and exchange rates because of the difference in interest rates between two countries can mean you either receive a positive interest rate credit into your account or you pay out a debit out of your account, depending on which direction you're trading a currency pair. So the Mexican peso is very attractive to sell. Sorry. The Mexican peso is very attractive to buy against the US dollar because Mexico has a higher interest rate than the United States at the moment. So if you do sell this currency pair and you held your trade over a 1 year period, you would receive a 4% interest rate credit into your account because of the difference in the rates for funding this trade using US dollars and investing in the Mexican peso. So if you have a look at the US dollar, the US economy, the interest rate at the moment, the interbank rate is 0.21%. The interest rate in Mexico is 4.72%. So if we put this into our spreadsheet, we can clearly see that if we are to sell the currency pair, then we're going to be receiving a 4.5% credit into our account on the amount of lots that we buy in a trade over a 1 year period. Or if he was to buy the US dollar, we'd be paying out 4.451%. So you'll be losing money on the trade because of the difference in interest rates. So remember, if you are buying Mexican pesos and you're selling US dollars to do so, so you're owning US dollars, selling US dollars to buy Mexican pesos, the amount of Mexican pesos you buy, you're going to receive an interest of 4.72% on the amount of Mexican pesos you buy, and that's going to even pay you a daily amount. Or if you're buying the US dollar, you're going to be losing 4.51%. You're going to be paying out, 4.51% of the amount of dollars you've used to buy the Mexican peso. So clearly it doesn't make any sense to be buying the US dollar against Mexican peso. And here we have an example. If we are trading one lot of US dollars and we're buying Mexican pesos, we're only paying out 0.21% in interest on the dollars we've borrowed to invest in the Mexican peso, but we're receiving 4.72% interest. So you can clearly see that means that we will be receiving a daily credit of our account of $13 a day, for an example, if you're trading one lot. Of course, if you're trading bigger lots, you're receiving more money. And we're not even factoring in the fact that if the currency then starts to move to the downside and appreciates in value in the exchange rate as well, you're going to make money off the appreciation in the currency's value alongside the interest rate differential. So that's the reason why if you go on Bloomberg, you read a lot of reports, a lot of interest-seeking yield investors are short the US dollar Mexican peso because of this interest rate differential between the two. Now, if we get past the low of the previous low set, which is coming up now, and we have a 1 month volatility stop loss of around 7%, then that will give you your stop loss range and your take profit target. We could aim for around 19 because that's the lows of the year that we started off on before the pandemic caused the dollar to get really strong when markets crashed in early April. So that's a trade I'm looking at the moment anyway. At the moment, as soon as you do break past these lows here, I've set some alarms on my charts, and that can be a good short-term trade. Thank you.